Good day, everyone. Welcome to Storent Holding Investor Webinar. We will start with company's presentation, followed by a live Q&A session. If you would like to ask your question to the company, please use the Q&A box at the bottom of your screen. For your convenience, we are recording this session and replay will be available shortly after the call. That being said, I'm turning the call over to our hosts. Andris Pavlovs, co-founder of Storent and chairman of the board of Storent Holding, and Bai Bonkel, CFO and board member of Storent Holding. Please.
Hello, everybody. As we promised, we would like to share information about our company, about our operation in 2024. It was very interesting and challenging year. We, together with my friend Ariesta, bought out previous venture capital fund and my first partner in 2022, December. And in 2023, we should make a lot of corporate structure changes. We merge companies, we, let's say, simplify the structure of the companies. But in 2024, we focused mainly on our operation itself. And of course, we try to improve three main areas. First one, it's of course remuneration systems, because everything, I think, in any business starts from our employees, from our team, how we can motivate them, and this is very important. I think it's critical for any business. Second one, it's IT systems. We had very old IT systems. It was very, let's say, convenient for company employees, for users of these systems internal. It's also our customers, but we had a lot of risks because the technology which we had used, it was already out of date, yes. And actually, these technologies were very old. And third things which we need to improve, of course, this is our fleet. This is our products. We need to invest in correct product. We need to improve our range of product. And of course, before 2022, we did not invest almost for 4 years, and of course it affects significantly quality of our fleet. And we did big investments in 2023, and in 2024 we made one of the biggest historically investments in our fleet in Storent history. Please, next slide. I would like to explain a little bit more about the remuneration systems, how we actually, what challenges we had. Actually, I think in all businesses, in all companies, we faced the same problems, that employees came to us and asked to increase the salary because of inflation, because of the situations on a market, and we didn't want just increase the salaries and that's it. Yes, we tried to find win-win, let's say, solutions for employees and for owners of the company. We are, as owners, interested to get higher results from each employee, and of course we are ready to pay higher salary for people who is a hard worker. And we try to, let's say, differentiate people based on their performance. And actually, we implemented these systems. It took almost a year, approximately for the whole year in 2024. We start to implement from July. We finished at the end of the year this implementation of changes of salary systems. And we have some base level of salaries for our employees. But after that, based on their performance, we have three groups of our employees: superstar, star, and underperformer. And for us, it's very important to have these superstar and star level employees, which is bring very good results to company. And they have highest salary. Our superstar have highest salary in the industry. And on the top of this salary, they could get bonus. And also we have annual bonus if they are reaching some annual turnover. And we are paying, depends on these results, we are paying additionally some salaries. Actually, at the end, if the person is superstar, they could get, I think, approximately 2 times higher salary than highest salary in our industry. As I said, this is we did because we didn't want just increase salaries because market increasing to everybody because of inflation. We try to increase salaries, but only based on people performance. This is critical for us to get higher turnover for employee. We are around 200,000 per employee, but our target at least 250, and actually the target in a couple of years to reach 300 per one employee. And this is critical to be profitable. And this was actually big changes in our company. This is not only about remuneration, this system. This is about culture in our company. And we try to, let's say, motivate people to reach highest results. We try to support them. We try to train them. We have internal customer service and sales trainer. We all the time have training for different products because we have 24 product group. And of course, it's to be a competent, to be an expert in our products. It's of course they need to learn a lot. And this is very important for our future results. And now we already see this in our results. We already see that we have a lot of superstars, we have a lot of stars in our company. Yes, we have also some underperformers, but this is actually our target to help them to get better results. If they are not able to do this, let's say, we need to change these employees. This is actually changing of culture and changing of, let's say, how we are, what is the agreement between the, let's say, owners and employees. We are ready, like owners, to share our profit with employees. We are ready to pay highest salaries in the industry, but only if the people would bring results. This is very important for future development of our company. And it took a lot of time to find right criteria, to find not subjective criteria, a very objective criteria. It's actually sounds very simple probably, but in real life it took months and months to did these things. This is very important for future developments, and we are very happy that we did it. Next things which was very challenging for us, it's IT system change. I think who faced these changes of IT systems knows that it's actually very difficult and challenging process. And all the time, IT people more optimistic than it's happened in real life. Of course, we from the 1st of January 2024 had absolutely new systems in everywhere. We have back office, we have Intel analytic systems, we have new private web, we have everything was new. Our bookkeeping systems accepted. It was also all these systems now based on a cloud and using the latest technologies. And actually, this was also very big and challenging process, but we cannot develop the company without these changes. And actually, let's say almost 95% we have done this implementation at the end of 2024. Still, we have some things which we still need to improve, and it will take, I think, Q1 and Q2. But having this in place, it will significantly increase efficiency of our people. It will significantly increase the way how we are selling, how we are communicate with our customers. And actually, you will see in nearest future how it will be, let's say, how it will bring additional sales and additional customers to the Storent. It was also very important step, which was very difficult, I would like to say also using this opportunity to our team. And for them, it was very difficult period when we implemented new systems, but we went through these difficult times and now we, let's say, back to normal operations, and we can focus mainly on our customers because, let's say, first half of the year, we spent our employees, I think approximately 50 times spent to, let's say, fighting with some bugs, problems with the systems. It took a lot of efforts and time from our team. But we did it, and again, we are happy that we implemented, and in nearest future, we will see results of these fundamental changes in our IT systems. Next one, it's about our fleet. You can see that we invested 24 millions, 6.9 millions we invested in telescopic handlers. And forklifts, this is mainly Manitou. People who know these machines know this is top machine in this product group. We invested a lot in lifts and working platforms. We invested a lot in earth moving equipment. We are the biggest player in Baltic countries in generators, and we invested a lot. And of course, we still need invest. And for this year, we have also a big plan for investments. Yes, that's why at the end of this presentation, I will tell you about our future plan. Baiba will continue with some figures to understand what was the results.
Yes, good afternoon. My name is Baiba Onkel, and I'm CFO of Storent Group. So as Andrus mentioned, the three main milestones for Storent business are people, motivated people and skilled people, technologies, and of course equipment. So last year we did investments 24 million, and it was replacement of existing fleet because we have to renew fleet and also invest additional to the new fleet. And that allowed us to increase our fleet up to 113 million in original acquisition value, our own fleet. So we can see that the historically higher amount we reached in 2019, it was 100 million, but then our fleet reduced, and also that resulted in a little bit in sales result decreasing. But now we are back on the track, and we have renewed our fleet and also addition to the newer models and bigger amounts of the fleet. But coming back to the Storent Group and performance and financial performance. So last year we made 47 million sales. It resulted in 13.3 million EBITDA, and earning before profit was a little bit less than 1 million. So sales increased compared to the last year, but our profitability a little bit decreased, and I will tell about that a little bit later. But about Storent Group in the key numbers, so we are 100% Latvian company owned by two individuals. One is here in our meeting. We employ close to 250 employees. We have 30 rental depots across 5 countries. We are leader in technologies. As Anders explained, we are doing a lot of investments, money investments, and also our know-how investments. In the Baltic, we own 11% of the market share. Going country by country, so our leader country is Latvia. So we are number 1 rental company, and last half year we reached the highest rent income growth in absolute numbers. So very strong position, strong team, and a good performance and most profitable performance in the Storent Group. Estonia is the country with the biggest growth potential. So last year we reached excellent numbers with 59% rent income growth because we managed to assign the expert team from one of our competitors. And still the Estonian market has potential, although maybe market itself it's not in the best shape, but let's say our size allows to grow and be more competitive. Lithuania is a very stable player in the Baltic, between 3 Baltic countries and Storent Group. We opened last year 2 more rental depots. Market is quite competitive, price sensitive, but we are doing well, and team is ready to further growth. So in Baltic countries, we are general rental company, so we offer wide range of rental equipment and have quite spread with our rental depots. So quite good geographical covering. In the Nordic countries, we are specialists. So Finland is making 20% of Storent's rental operations, and they are focused on lifting services. So the main goal was in the last half year to widen the base of the customers because construction market was declining. So we were trying to find another niche like industrial customers. And Sweden is the smallest entity of Storent Group. They operate. They bring only 5% of the rent income, but still the team is very skilled and focused on telehandler and lifting services. So definitely the Swedish market has the biggest potential if you look at the size-wise between those 5 countries. So last half year, improvement in the rental income from own equipment increase here is by country. So as I mentioned, the Estonians did the biggest increase and very excellent result, although there is still potential to grow size-wise and also profitability-wise. And yes, and moving to the next slide, here's the increase month by month. So we monitor and evaluate the two type of rental income. So Storent has his own fleet, and this is very important, and we invest in that. But on top, we also split rent equipment. That allows us to have wider range of equipment and also serve customers during the high season when we don't have enough equipment. So more profitability brings our own fleet, but the additional market share and customer satisfaction we can get also by split renting. So that's why we measure and report quite a lot and do this emphasis on our own equipment rental increase, which was, as you see, 2-digit numbers in each of the months. So we managed to get the outcome of our investments in the rental equipment. But on top, we also increased our split rent income, which is also good. This means that we are competitive and we serve the customers. Here's an overview of equipment rental market. So as we see, although maybe this economical situation doesn't feel good, the sentiment maybe is not so positive, but we can see that actually in the Baltic countries, equipment rental market has grown every year. And last year in the Baltic it was 4%. The Estonia was quite flat, but there was increase in Latvia and Lithuania. And for this year, 2025, it's estimated to have 7% increase. So, and it should reflect also the Storent result, because we already from the January can feel that market is active. The not so good situation was in the Nordic countries, where they faced the crisis of real estate market, and we can see that market was decreasing on average 10% from 23 to 24. But now it's estimated that this year it will start to come back. It will not still reach the highest numbers, which was 2023, but it's slowly recovering, and this is also a good sign for our business. So where we rent equipment. So we are very much connected with the construction industry, but actually it's also much wider. So we serve customers to the road infrastructure, civil construction, renovation, manufacturing, and on top comes also military sector, energy sector. Right now, the solar parks and wind parks are very top projects where equipment is needed. We are very strong also in entertainment industry. We are leader in generators, which is serving big festivals, concerts, and also manufacturing and other industries. So we try to widen our sectors where we rent equipment, and it helps us to reduce this seasonality. On average, we served 12,000 customers last year, and it was 87,000 deliveries. So our business is quite much short term. That means that we have to focus on efficiency, how the system could help us, how the process improvements, and how skilled and high performing employees can serve so many rental transactions during the year. So key financials. So during last 6 months of the last year, we managed to increase our sales and also EBITDA. So and also and here's the profit dynamics. So we managed to earn 2.5 million more from gross profit. This means that the operational profit. But then on top came extra personnel costs. As Andrus mentioned, we faced the challenges where we want to keep our expert, but it costs more. So we found out the motivation system, which allows us to focus on performance, but on the other hand, of course, it affected on the personnel costs. Also, other operating costs increased because we opened additional rental depots. And then the biggest increase in the cost side came, of course, from the depreciation because we increased our fleet. This means also bigger, larger depreciation. Of course, the interest expenses because we raised the bonds. We also financed the equipment through the leasing. So this position is one of the largest in our expense side. And let's say it's very good that we can raise the bonds, but they are also expensive and they take some part of our profit. But we are on the stage where we want to grow and expand, and this is the price what we pay. But of course, we are constantly looking also for how to improve our financing structure and get better interest rates for our debt. But yeah, bond. Why we are in the bond market? So because we have very limited financing options in a bank system, and we evaluated the risks also for alternative financing like venture funds or mezzanines, and we came to conclusion that bonds fit to us the best, although the price is quite high, but we have freedom to invest and expand our operations.
I would like to add here that from the banks we can get financing only for equipment which is like earth moving equipment, telescopic handlers, lifts, and this is equipment, let's say, with worst payback in our product range. For small equipment, for example, which like, I don't know, aluminum towers, vibra blades, we cannot get any financing from the banks because banks do not consider this equipment like they are not ready to give any leasing for this equipment because this is not registered equipment. Yes, and of course this equipment brings much better payback for us, and that's why we need to invest in this equipment, and to invest in this equipment we need to have some resources, and one of the best way to get these resources, this is the bonds. And of course it's expensive, but I'm looking on this interest like on let's say profit sharing between owners and investors. Of course, at this point of time, let's say our investors earn their profit. We like owners did not earn the profit, but this is our task to increase profitability of our company. And I said, changing remuneration system, changing IT systems, investing in right product groups, using the bonds, and also some bank financing. Thank you, let's say, Luminor. They are our partner for many years, and they are supporting us for many years, and we getting some financing from Luminor. From my understanding, this is one of the, let's say, best banks which is looking on companies and ready to finance something. And of course, we need these resources to invest in equipment, because without equipment we cannot do our business. This is clear. And of course, we have some financing from producers of equipment, but it also limited. That's why we use bonds, and we will use the bonds.
Yes, and continuing with the financial numbers, so at the end of 2023, we changed the evaluation method of our long-term assets, fixed assets. So we switched to the fair value. So, and at the end of this year, our fixed asset rental fleet fair value is close to 29 million. And if we look what's on the other side debt for these assets, so half a little bit more, less than half, 25 millions are bonds, then 27 millions are leasings and producers financing, and 3 millions are other debts. So right now our asset fair value it's much higher than our debt, interest-bearing debt. And coming back to the equity value, so last year it decreased by 8 millions. And there are two main reasons for that. So 4 millions we reduced the reserves for our assets. So according to IFRS, we need to reevaluate our assets every year. So we reduced reserve for 4 million. Mostly it was for the assets which were sold as old assets to the auctions. The old fleet we delivered to the Europe to the auctions, and it's like a wholesale of the used equipment. And the second was the payout of the dividends. So the owners still had the payment plan towards the previous owner to buy out company. So there went 4 million, and by the end of June last year, all debt was paid off. So actually, the companies are free of
I would like,
owners does
yes.
not have any debt to the previous owners, and they can manage company according to their strategy and
Yes,
future.
it took some time. We had some schedule to pay previous owners and venture capital fund, and we finished this payment in June 2024. We paid everything, and now we don't have any debts to any third parties. And actually, we can do and manage companies according to our vision and strategy.
Mhm. And at the Q4, company fulfilled the covenants, so we are on the edge, but we still did it. And we organized also voting for the change of one covenant, net debt EBITDA, in last August, September, and we got enough votes and approved the changes. So right now our net debt EBITDA is 4%.
Yes, I would like to add here also, I would like to say thanks to our investors who voted for, because it's very important for our future development. It's you should understand one thing. At the beginning we need to invest in our equipment, and it significantly increase our liabilities. But results for that equipment will come. First results will come in 2-3 months, but really getting full results to our EBITDA, it takes at least 12 to 15 months. And now, for example, we see this, you saw this in previous slides, we are growing in our own equipment, significantly growing, and also results in this year, we already know January results, we already know some estimation for February. We will grow, I think, more than 20% also in January, February of this year. And this is very important because we invested, and only just in some period of time, we are increasing our results. And of course, we should focus also on our costs. That's why we made these remuneration systems. We are also looking very seriously how to decrease some cost and to be more effective to increase profitability. But really, in our industry, if we would like to grow fast with two-digit numbers, the debt EBITDA covenant should be at least 4, but in real life 4.5. Yes, 4.5. This is the level of debt EBITDA, EBITDA to debt to EBITDA. If we are looking on the biggest companies in Europe, for example, some of them had 4.7, some of them have even on some period of time close to 6 when they made some acquisitions or made huge investments. And this is typically for our industry. And of course, we need to bring these results. We need to increase our sales. We need to not decrease, but limit, be very, let's say, careful with our costs. And one of the biggest parts, this is the personal cost. And of course, last year, I would like to be very open with you that we lost, from my estimations, between 1.5 to 2.5 million because of implementation new systems. It was really very challenging process. It was really very difficult process, and I am very happy that we almost done, and now we are focusing on a business. Yes, for future developments, we still will continue with these motivation programs with employees. We still need to do a lot of things in Finland, Sweden concerning our remuneration systems. We have a lot of trainings for our employees, sales training, customer service training, product training, a lot of training. Of course, we would like to increase the level of our employees. And this is very important to be expert in rental business. We will finalize IT systems implementations in Q1, Q2. And of course, we are going additionally to invest in 2025. Our plan between 15 to 20 millions depends on a situation on a market. We are going to open new depots. We already have plans to open two new depots in Latvia. We will open in Q1, Q2. Of course, we are focusing on active sales. We will launch our new webpage at the beginning of March, during the March, I would say. And this is also significantly change the way how we communicate with our customers. It will improve experience to order, significantly improved experience to order equipment through the online. We are still the leader in this field, I would say, in Europe, and definitely. And we have plans for next bond program. We will have program for 50 millions. Actually, 30 millions, 15 millions to refinance the bonds for this year, which we should pay on December 2025. 15 millions for investments, because we are planning to invest mainly in equipment with the high payback and good profitability for Storent. And this is only one way how we can invest, because I said to you that banks do not want to invest in, do not give for that equipment any financing, and that's why we need to raise again bonds. And of course, we are still looking for M&A. We are looking for M&A in Finland and Sweden, but at this point of time, we don't have any good targets in these countries. And we are seriously thinking about to open operation in one more country. This is United States of America. And we are very actively looking for some acquisitions in Texas, Florida, and California at this point of time. And 20 millions from our bond programs will be used for acquisitions. If we would have some real acquisitions with, let's say, signed term sheets and approved conditions between sellers and buyers, we will issue additionally 20 bonds on the top. Not actually 15 millions repay bonds, 15 millions for investments, 20 millions for M&A. And if we will go to United States or any other new country, of course, we would like to keep the previous owners of these companies. That's why a little bit more complicated. We don't want to buy 100% of the company. It's maximum 2/3, minimum it's 51%. But definitely we would like to have on the board some people who know these markets much better than we. And actually, at this point of time, we have already some targets, potential target in United States. We are working. This is in process.
Thank you. Exciting times ahead. With this, as I understand, the presentation is over.
I think I speak too much again.
Yes, so thanks again. We're now opening the floor for questions. Please submit them in writing through the Q&A window. I'll remind that questions can be submitted either anonymously or with your name. We have received one question prior the call, so let's start with that one. Are there any plans regarding the IPO?
Yes, we have plans regarding the IPO, but at this point of time, we have too, let's say, low of equity value, and we need to improve our equity value to go to the market. And this is actually why we are still using bonds, because we expect to see, let's say, results of our 2 years very hard work in 2025 results, which significantly increase equity value of the company, and probably we will consider IPO. Because definitely in one point of time, we will need additional equity.
Thank you. I don't see any questions just yet, so let's wait a minute longer and allow participants to ask their questions to the management. All right, the presentation seems to be very explicit and detailed, so we
Nobody
don't
has
have
questions.
no. I must correct myself. There is one question from the participant. When will there be any information regarding new bonds?
I think it will be beginning of March, I think. Baiba, could you correct me? You know precise schedule.
So yes, further announcements will definitely come, but it's our plan is around mid-March. So we will come with more precise information quite soon.
Yeah, we are working on it, and we will come with most probably with new partner who who will help us in this time to issue the bonds. But yes, it will be. I think the subscriptions could be end of March, beginning of April.
Thank you. A follow-up question on the topic. With new bonds, how big will be the debt EBITDA?
Still, we will keep the same covenant for. We are not going to change the covenants.
Thank you. All right. With this, I think we can close the call. Andri, Baiba, over to you for some final remarks.
So thank you everyone who had time to join, and thank you for those who will watch this also afterwards. And if you have any questions or proposals for improvements to investor communication, you are very welcome to contact me. Thank you.
Yes, you can. Thank you very much to everybody who are watching this presentation and who will watch later. Of course, thank you very much to all our investors, to all our partners with whom we have been working together many years. And of course, we will inform you as we promised, let's say a couple of times per year about our operations. And we will continue to develop our company. Actually, we know what to do, we know how to do. Of course, we had a lot of things. We had a lot of things to change, Of course, it's takes time, but we are very optimistic looking on 2025 year. It starts also very good, and we will reach, I think, in 2025 the best historical results of Storent. Thank you everybody.